we don't realize how good we have it here. But when you travel and you see just the difference between a middle class American existence and a middle class existence in the UK or in France or
It's
anywhere
much
else
better
in
in the
the world,
US. Yeah.
yeah, it's very different. So in many ways, we've had it better, but I think we're also going to have a higher fall because we're falling from a much higher place.
It is my pleasure to welcome back my favorite lady in the gold business, and that is returning guest Lynette Zang. She is here to talk to us about quite a few things. Of course, she's the chief market analyst for ITM Trading, and she is up at her retreat, I guess I'll call it. Lynette, welcome back.
It's good to be back, Jason. It's good to see you again. And yes, it's
Likewise.
also really good to be up here at my bug out house.
Yep, your bug out house. That's probably the better name for it. And
Yes.
you've talked about that extensively the last time we were both sharing the stage at George Gammon's event. You talked about that a lot. But, today, Lynette, I'd like to start with just sort of your general impression of what is going on. A lot of things are changing right now in the economy. Of course, COVID 1984 really changed the world, I think, really for a generation. I think this is going to be a very long-term shift in just the way everything operates. But lately, we've seen interest rates go up a lot. Mortgage rates are higher. Still, real estate inventory is extremely low, but it has ticked up just a little. So, we'll see if that changes. Of course, gold is holding pretty well, for sure. Crypto, though, is way down. What do you think? I mean, gosh, there's just a lot to talk about.
There is so much to talk about. But, if you want to talk a little bit about crypto and, you always have to be careful when anything is named a certain way, because it means it's just the opposite, like the stable coins, which don't.
They ain't so stable.
Exactly. And being able to shift from I think it's proof of work to proof of stake.
Right.
I don't know. Gold, when I look at gold, it's used across every single avenue of the economy, and they haven't really figured out how to duplicate it in a lab. And so it's proof. Yes, you have to test it to make sure that it's real. I mean, that's obviously we work with our wholesalers and everything is certified. But, gold is gold, and there isn't any substitute. They've tried for 6,000 years to find a substitute, and they have not been able to do it.
Yep. The alchemists tried to duplicate it in a lab, so that doesn't seem to be a possibility. It's such a unique metal. They will eventually get it from space, from asteroids and so forth, but boy, talk about an expensive shipping cost.
Yeah, really. But even so, even if they created this great big find of gold, the whole point of it is that there is a finite amount. And you can't really, I know that they want to say that in the crypto world, that, it's immutable, that you can't take it back, that you can't do this or you can't do that, when we've seen, a number of instances when all of the things that they profess really aren't true, because it's still a big test. This is still new. So, and I know
what I like to say about crypto is that people have to realize Bitcoin is just a teenager. It's a very young, new thing. Gold is 5,000 years old, right? Or really forever old, but it's been valued for 5,000 years that we can tell, at least.
Exactly. And what the powers that be want is for all of our titles, for all of our equity to be held on these coins. That's what they've been pushing for a very long time. And you have to ask yourself how comfortable you really feel about doing something like that. I don't feel comfortable with it, but should there be the next real estate crisis and people are trying to save what they've accumulated, just like we saw in 2008, they end up making choices that are not necessarily in their best interest. And my guess is that'll be one way to start to move property and equity into the digital universe.
Right.
direction we're
So,
going in. We're just not done yet. It's still a battle royale.
absolutely. We're seeing very significant inflation. Of course,
Yes.
the government wants us to believe it's about 8.5%. Of course, we know better. What do you think the
Mhm.
real rate of inflation is?
Probably closer on average to 15%.
Yeah, I agree. 15, 16% is probably the
Yep.
right number. And where do you think this is going? I mean, is this going to persist at this level for many years? Will get
Oh,
better and decline a little or get worse?
here's the problem. And this is the piece that I've studied since 1987. We are at the end of this current monetary experiment. And central banks are out of tools because really the key tool that they've had are interest rates. And they've been anchored at zero since 2008, and their balance sheets, which are at nosebleed levels. So, what do they have to regulate the rate and speed of inflation? Are they doing that because that's really going to help inflation or because it's going to help their credibility? I think it's about credibility because you can look at Mexico, who has been really aggressively raising rates, and yet they are still dealing with double-digit inflation. So personally, I do think that we're at the early stages of the hyperinflationary event, and we'd be in it if it weren't for the confidence still in the currency, which is incredible to me, but okay, it's our tool of barter, and it's hard for people to shift that. But I think we're headed into a hyperinflationary depression. The system is already shifting, right? They have to reset it. We need a big enough crisis to get everybody on board.
Right. So put a number on hyperinflation. There doesn't seem to be much agreement as to academically, what that means. How much is that?
Officially, it's a 50% annual inflation level. But in reality, when you see prices double, triple, I mean, it really is more about the speed at which those prices can double and triple, et cetera, et cetera. For some that are in the lowest echelon and they have to make a choice between putting gas in their car to get to work or putting food on the table to feed their family, they're already in that event.
Yeah.
I mean, so
Sadly,
it's relative.
yeah, it is. Sadly, that is so true. And everybody has their own personal inflation rate. So inflation is just a wealth transfer from the poor and the middle class to the upper middle and the rich who benefit the most from it. And, I was thinking of you today, Lynette, in anticipation of our interview. One of my listeners, and you probably have these too, sent me these years ago, these Zimbabwe dollars.
Mm-hmm. Yes, I do have them.
Yeah.
Look at you. You could be a trillionaire in Zimbabwe and not
Yeah.
be able to buy eggs.
Now, these have been demonetized, but there was a time when one Zimbabwe dollar actually had legitimate value. And here I'm holding a $100 trillion Zimbabwe note. But, the US kind of can get away with a lot, can it? Because it is the reserve currency, right?
Well, officially, yes. The transition started back really in 2000-ish when the Federal Reserve started buying treasury bonds very quietly. So already we couldn't fund all of our debt externally. We had to go internally to do that. And lately, boy, it's just headline after headline after headline about the loss of that status as the world reserve currency. So, we've been knowing that it's been coming. I mean, it happens to every single currency. But I think what we've really witnessed, let me say the world has really witnessed, is the abuse of power by the US.
Right.
If we don't like what you're doing, we just, boom, cut you off at the knees and you have no access to, any foreign markets. And we saw it again in Canada. Right? At our level, at your and my level, they didn't like what the truckers were doing. So boom, they just cut them off at the knees.
It is
Is the
amazing and
system.
incredibly scary that a democratic country like Canada could turn into a tyranny.
Yeah.
That's just shocking what is happening there and still happening. I mean, Trudeau thinks he's some sort of a dictator. I mean, I can't believe it.
it is really scary. And that's right next door. And most people kind of thought of Canada as, a sister to the US.
Yeah.
And even the US. I mean, if you look at globally in the democracies around the world since 2020, they have gotten so aggressively heavy-handed about removing our rights and also really tamping down free speech, the right to protest.
Yep.
And I came across this piece, it's a March 2022, an IMF piece, where they talked about what was happening on a global level. So as we know, the central banks are really out of tools. So they're trying all different kinds of experiments. We've talked about modern money theory, where they can just print however much money that they want, as long as you're a reserve currency, so that you can pay your debts in that currency. It doesn't really work, because every time a central bank prints money, the money that's already out there loses value. But I think that what I found really interesting is this next experiment, which they don't want to call modern money theory because that has a bad name. So let's just call it outright transfers. Now, Jason, you might recall that I think it was 2019, to a lot of, well, at least in my world, a lot of pomp and circumstance, the Federal Reserve created the Fed Now accounts. So every single American has an account with the Federal Reserve, whether they realize it or not. And so during the next crisis, it's a button push. They talk about central bank digital currencies.
Modern monetary theory just appears to be a fantasy, if you ask me. I just can't see how that would really work in real life. But the left likes it because it takes away any tether that the government would have on spending.
Exactly.
I mean, it's just a fantasy to think that a government, a company, or an individual can just spend, and there won't be consequences. Of course there are consequences.
Incredibly, in this particular paper, they talk about, I mean, right now, all right, when we were on a gold-backed currency, the level of gold that was held in reserve was restrictive to the level of debt that could be created. All right, now we go into the fiat world, and as of 1971, the level of debt that created the money, but there were still quasi limitations. I mean, we've seen the balance sheets explode, many trillions of dollars since 2008. But in this new outright transfer system, all you have to do is want to have more money to do a project or to do something. And boom, it's created. What do you think that does to the value of the currencies that are already out there?
I mean, it's so obvious a child could understand this. It's incredible that they think they can just do this with no tether, with no responsibility whatsoever.
When you have already declared bankruptcy, which is basically what governments have done, they can't ever pay this debt. Yep. It's not that it's unsustainable, it's unpayable, and they know it. Then what difference does it make if you happen to have credit cards that you can run up as much as you can on these credit cards? And that's what's coming, because the central banks are out of tools. They are out of tools. And now it's becoming quite obvious that they are out of tools. And,
right.
And if you think about going back to 2008, because that's really when the system died, and you look at what they did during that period of time, that's when the QE started, quantitative easing. And they've just printed so much money, and all of that inflation was held in targeted assets: stocks, bonds, real estate. These were the three targets that they overtly said, we have targeted them for reflation. So the fact that they are now forced to raise interest rates into this severely, and we would have discussion on the real estate part, but into a severely stretched market, look at the stock market. Just look at the stock market. It's schizophrenic. It doesn't know what to do because its drug of choice is being taken away for a minute.
Yeah. And its drug of choice is easy money and low interest rates.
Exactly.
Yeah. So you said earlier, Lynette, that we're at the end of this experiment.
Yes,
And
absolutely.
since we're all living in uncharted waters, I just want to ask you, how do we know that? How do we know we're at the end of the experiment? I mean, is it possible that they can just keep kicking this can down the road for 5, 10, 20 years, 80 years, a lifetime?
No, and the way that we know that is there are those repeatable patterns that happen right around the end of this currency's life cycle. War being one of them. We've talked about that before. We didn't know where the war was going to start, but we knew there was going to be a war. And so, war is one, civil rights are another, women's issues are another, severely overvalued stock markets. I mean, there's all of these repeatable patterns that tell you, and the fact that they're out of tools. That's another one. You look at the interest rate graph, you look at the purchasing power graph from the Federal Reserve Education Department. This graph, that's my favorite, probably my very favorite website. And what you're looking at here is a purchasing power chart of the consumer dollar. And you can see how quickly it has escalated on the way down.
Right.
That is actually a result of inflation where you can see it. But if you go over to the left-hand side of the screen and you see the number 35, 34, well, that's actually 0.03. It's not even 0.035 cents because it's below that. So there's about 3 cents left officially out of the purchasing power of the dollar. And no, I don't think
from when the Federal Reserve was created 100 years ago, a little over 100 years ago, right? Is that what you're saying?
Oh, yes. Yes.
Yeah.
So a dollar would buy a dollar's worth of goods. Now that dollar only buys not even 3 cents or not even 4 cents.
It's really surprising, number one, that this is your favorite website because the powers that be run it. I just have to throw that in.
They're more honest on it.
Interestingly, you're right, because it's amazing that they even publish this stuff. This is literally a report card on bad central banking. And it's on their website, but whatever. Maybe they're just not that coordinated.
Too true. But think about this. What happens when the purchasing power gets to zero?
Yeah.
Where do they go from there?
Well, here's the thing. What they've done pretty successfully, actually, is they have hidden a lot of this inflation that is in the system. Oh, yeah. And Lynette, I don't think I've ever talked to you about this, but and this is solely my opinion. I've never read or heard this anywhere, but it's interesting to me that Nixon closes the gold window on August 15th of 1971. Mm-hmm. And right in that same era, he takes that historic trip to China. Did he have the foresight to see that massive inflation was coming and there was this huge workforce of 1 billion people in China that we could make trade deals with? Like, that would have been amazing. I mean, he was definitely, regardless of all his faults, he was a smart man. There's no question about that. Globalization. Yeah. And then allowing immigration from Mexico. You can import the products cheap from China and elsewhere. And all these free trade agreements that have just sold American jobs down the river. And then, why won't they control the southern border? Well, it's because they're importing deflationary pressure from Mexico with cheap labor and importing deflationary pressure from China and abroad with cheap products and outsourced services. And then, of course, technology is the natural inflation fighter, right?
Right.
So they've been able to do that pretty well. If those things didn't happen, inflation would have run rampant, not just in the 70s, but 80s, 90s, 2000s, right?
Exactly. That is so brilliant for you to point that out, because as a new stockbroker in the 80s, all the talk was about globalization. And they did. That's exactly what they did. They imported the deflation. But the reason why they cannot continue this on, 5 year, I can't see it. No, I can't see it. I can't even see it 5 years.
Well, what's the reason? What were you going to say?
Well, I was going to say, because we're at the end. because they're out of tools. Back in the 70s, they ratcheted interest rates up to 21.5% on the overnight rate intraday. That gave them a really long ramp room. So this is really the key tool, the effective federal funds rate. This is the overnight rate. And you can see how they ratcheted it up all the way up to right here. It was a little higher than that, but 19%. And that gave them all this ramp room. These gray lines are official recessions. And it's pretty obvious that every time they hit a recession, they drop the rate like 5.5 to 5.75%. And then that stimulated borrowing and spending. But can they do that now? No. I want to zoom in here so you can just kind of see where we're at. This is that little bit of interest rate. And I also, as luck would have it, we ended up in 2015, 2016, which was the last attempt to push up interest rates, which is more about giving them the ability to lower it, really, than anything else. Right now, it's more about their credibility. But in order to truly fight inflation, so the theory goes, I don't even think this is true anymore, but so the theory goes that if you raise interest rates enough, then demand declines, right?
Right.
But that's not been what we've seen around the world. Can they raise it above the true inflation rate?
Well, demand for what? When you say demand, what do you mean?
Well, okay. So when they drop the interest rates, then you go out and you borrow and spend because money is cheap.
So
right?
just demand for cheap money is what you mean.
Exactly. That's exactly what I mean.
Yeah, I didn't know if you meant demand for consumer products or real estate or what. I just wanted you to clarify.
For all of the above.
Yep.
Right? If it's cheap to borrow, and then you borrow and you spend. If it gets more expensive to borrow, well, then you borrow less. Right. So this isn't coming out of earnings. This is coming by incurring more debt. And in fact, they were just talking about the retail public, and the retail public has not been discouraged by all of this inflation. And why is that? Because they're either spending down savings or they're taking on more debt in order to try and maintain this, because in their minds, I think people think, well, this is just temporary, but I don't think it's temporary.
Right. And the consumer will be unable to take on more debt if we see rates go up too far. But the interesting thing that happens is, I mean, do you think the Fed will continue to raise rates? I don't think there's any Paul Volcker out there who has the guts to do it, but it has been fairly shocking how quickly Powell acted in the last 2 months. I mean, he acted very slowly. For a long time, he didn't do anything when he should have done something. But then he sort of acted suddenly with a knee-jerk reaction. If you ask me, it was a little too harsh too soon. But what do you think?
Well, for one thing, if he's got to get above the rate of inflation to control that inflation, he has a very long way to go.
Agreed.
So a half a point, to me, that is not nearly aggressive enough. And I don't think he's Paul Volcker. Mm-hmm. And remember, too, that was the kickoff. This is the end. So it's a different kind of game.
Got it.
That was the beginning of this particular game. This is the end of this particular game. So, right. No, I don't think we have anybody that has the courage to raise rates enough to really cut demand. So as long as they don't, as long as we're still this low, even though interest rates have gone up, it's still in negative territory. If you buy a bond right now and you hold that to maturity, or you even get the payments on that, it's still below the rate of inflation. Yeah. So you're still actually going into the negative. And that's right. What happens, right? When you get to zero, the only place to go is to attack that principle, go into the negative. And in reality, if you're sitting on bonds, that's really what you're doing, is you're going into the negative. Mm-hmm. If you hold them to maturity and presume they're not going to default, you are still negative to the wealth that you put in there to begin with because of that inflation piece.
Yeah, right. And one assurance that we will have further inflation and that they won't raise rates too high, in my opinion, is that they really can't, because it will severely hurt the country's ability to service its own debt to foreign countries. So they're in an impossible situation, right?
Yeah, they are.
What are they
That's
going
how
to do?
you know we're at the end.
Yeah, all right.
You
So
know,
what
I mean,
happens at the end? Describe the end for us.
the end is not pretty. It's why I'm sitting in my bug out house right now. Dead serious. And the end is very bleak. We've seen what it looks like in Zimbabwe, as you pointed out before. We've seen what it looks like in Venezuela and, many other places, unfortunately. So we end up with abject poverty. I don't know what that percentage is. I mean, globally on average, it's 80%. But, if you look at places like Venezuela or Zimbabwe, it's closer to the 90%. You will notice I didn't say 100%.
Mm-hmm. And when you say abject poverty, what you probably mean, I think, and correct me if I'm wrong, is that a huge part of the country's population in any given country moves down the socioeconomic ladder rather severely, but a very small number, the cognoscente, the elite class, becomes richer and richer. And
Yeah.
it's a wealth transfer to them.
Absolutely. Did we not see that in the K-shaped recovery?
Yeah, absolutely.
So that to me was just really a taste of what's to come at a severe level.
Mm-hmm.
Now, I don't know what the current numbers are on it, but if most people cannot come up with $400 in the case of an emergency, it's going to be a lot worse than that.
Yeah, yeah.
So,
Sadly,
yeah, abject poverty, you can't feed your children, you can't put gas in your car, you can't pay your rent, you just don't have the ability to sustain a reasonable standard of living.
yeah. The one piece of good news is if, we have listeners in 189 countries or an audience in 189 countries. For those in the US, you're probably much better off than the vast majority of the world because of the reserve currency status and the largest military and so forth. But Lynette, I know you think the reserve currency is coming to an end.
Oh, yes.
Elaborate on that a little bit, if you would.
Well, we've been really witnessing this since 2000, and really, the euro was created to take over as the world reserve currency.
That's not going to happen, though. Do you think?
That's not going to happen. Right. But they were trying. The SDR, actually, the IMF special drawing rights, the SDR, was created in '69 to take over as the world reserve currency. That's where I ultimately think we're going with it. But the euro was created to come in. So if you are a world reserve currency, you have to hold those assets. You have to hold dollars at this point in your coffers, whether you're a government or a corporation, to buy anything once you go outside of your borders. And you made such a good point, Jason. We don't realize how good we have it here, but when you travel and you see just the difference between a middle-class American existence and a middle-class existence in the UK or in France or anywhere else.
Much better in the US. Yeah.
Yeah, it's very different. So in many ways, we've had it better, but I think we're also going to have a higher fall because we're falling from a much higher place.
And the fall is really related to people's expectations of how their life should be versus how reality hits it. And I think we're moving more and more. I mean, we've been moving in this direction for decades, but more and more to a banana republic style situation. And like you said, when you travel, you see this all the time. Go to Central America, go to South America, go to some Asian countries. You don't really see it in Europe as much, but you see it in Europe too.
But you see, I traveled more than any place else. So yes, I've definitely seen it there.
Yeah. And so you see beautiful homes, you see the high-end areas, you see mansions, but they have razor barbed wire around them. They have bars on the windows. These people have to have bodyguards. That's no way to live, even if you're rich, in my opinion. A big, strong middle class is what makes a country stable. And
Absolutely.
That stability, sadly, is going away faster and faster. The pace is speeding up.
Absolutely. And when people are hungry and hopeless, they make choices that they would not otherwise make.
Yeah, they have to.
And we talk about the bug out, and look, it's beautiful to be up here right now, and it's peaceful and it's quiet and all of that. But I'm so thankful that March 2020 happened, because that was a hole in my personal strategy. If things get really bad in the cities, which is the most likely outcome, where are you going to make your last stand? Where are you going to go? Shelter is a key. So now I'm working on putting the rest of the elements. I'm almost done. Well, I think I'm almost done. Probably not really. But food, water, energy security, barterability, wealth preservation, community, and shelter. And I just have a few more pieces up here to get that done. And I'm rushing. I'm telling you, I'm doing this a whole lot faster than I would have. Well, it definitely have moved up a lot of things that I thought I would do next year. But, you ask me how long this can last. I don't know. Timing is the biggest challenge of any technician. But what I do know is that when it's over, it's over. And you won't have any opportunity to get prepared. So I'm getting prepared now.
Yeah, good. Lynette, I know this is somewhat semantics, maybe, but you're a gold fan. Do you consider gold to be insurance or an investment or both?
To tell you the truth, I view it as both. It's definitely insurance because that demand out there is across the entire global economy. So I have full functionality and the broadest base of buyer. Now, it's an opportunity because a rising gold price is an indication of a failing currency. So it has been artificially suppressed and will continue to be artificially suppressed until enough confidence, the public has lost enough confidence, at which point they will do an overnight reset, an overnight revaluation, and they will use gold as real money with complete intrinsic value. So, right now I see those other assets as being up here value-wise and gold being down here. That's going to flip-flop. And so that's why I consider it as an investment, not in it necessarily in and of itself, but because I will be able to convert some of my gold holdings into income producing real estate or dividend paying stocks once I know who's going to be able to survive this mess, as well as rights, air rights, water rights, mineral rights, different things like that, because I'm going to actually have money to work with.
Yeah. And if anybody wants to know more about gold price manipulation, I've mentioned this for probably 15 years on the show, but go check out GATA, the Gold Antitrust Action Committee. It's pretty fascinating to see how the powers that be manipulate gold and silver and now I believe cryptocurrencies down because they consider these to be competition for their fiat currencies. Remember, the number one product of any government and any central bank is its currency. That is their widget. That is their product. And like any business, they don't like competition. Okay. So they're going to do what they can, but eventually their ability to do that and the whole narrative behind it has to ultimately fall apart. It's like the emperor has no clothes. Eventually, everybody figures it out. Yeah, right?
Right. That is really such a powerful point and a really important one for viewers to understand, because that's how you protect yourself.
Lynette, before you go today, I just want to ask you, you're in the business of selling numismatic coins. Is that just because that's the business you're in, or is it because you specifically don't like bullion gold? I've always been kind of curious about that. So can you explain?
Okay, well, number one, ITM Trading sells all kinds of gold and silver. The caveat is it's all physical. We don't deal in ETFs or anything like that. So if somebody wants bullion, they can do bullion. I personally don't buy gold bullion. I do silver bullion, but I don't personally buy gold bullion because I believe that there's going to be an over confiscation. Because as you brilliantly pointed out, government does not like competition. So if I go into the collectible realm, then that's my insurance, right?
Right. And you're taking that from the precedent that was set back in 1933 when they confiscated or that's sort of an oxymoron a little bit, because they required everybody to turn in their gold bullion. They paid them for it, but then after they collected as much as they could, they revalued it at a higher price, which, was I guess a partial confiscation, not a complete one. They confiscated like a third, not all of it, but we get it, right?
Well, and then they put it not just from 33, but that's a great example of it. When a country goes into war historically, they've needed to inflate away the currency. And so, gold creates restrictions for governments, so they don't like it. Mm-hmm. But I do think we're going to see an overt confiscation again, because manipulation of the price and making you live with inflation is definitely confiscation of your wealth. They just use different terms. There's the level of taxation is another form of confiscation.
Right.
So I am very certain. And of course, I had my Uncle Al, who was an antique dealer and had a couple of floor safes absolutely full of gold.
Yeah.
And that's how he protected himself.
Got it. But okay, show us. I think you have a chart on this, but numismatics versus bullion, we do have to wrap it up, but I really want to just cover this topic before you go.
This is a graph on the collectible coins going back to 1970. And you can see this is like the kind of lower endish. So I don't really care. There's all different kinds of coins that you use for different functions. So you always establish your goals. But I think that you can see that it is definitely in an upward trend here. And it is far from the peak that they reached in 89.
Okay, so this is a PCGS chart we're looking at, and that's the coin grading service. So this is what, a chart of numismatic coins?
Yeah, exactly.
Got it. Okay. So, and just for those who might not know that word numismatics, so there was a time when I didn't know what it meant. And, that just means collectible coins versus bullion, which is just gold pieces, right?
Okay. Right, exactly. It has they're pre-33. They have special value to collectors.
It has an art value.
Finite amount of them, and they're affordable.
Right.
Okay. This level is affordable. And I can't talk prices because that's not what I do anymore. But the last chart that I want to leave you with, so you can see what the wealthy are doing for themselves. Mm-hmm. So what you're looking at here are key dates and rarity numismatic collectible coins. These are coins that can be in the millions, many millions of dollars. So only the high end, the ultra wealthy can afford this. And you see that never even had the kind of correction that we saw in the regular collectibles. So for me, I don't need to spend $8 million on the coin in order to be in the same category, but the other coins are a severe bargain. So while gold itself and silver itself as well is severely undervalued, in my very strong opinion, what you're looking at, particularly with that first graph that I showed you on the coins, that in my mind is the single biggest bargain in this asset class. So I buy it because, number one, it protects, I think it gives me another layer of protection from an overt confiscation. And that's the primary reason.
Mm-hmm. Okay, good stuff. Lynette, we got to wrap it up. This has been great to have you again. Give out your website so people can find you.
Absolutely. It's itmtrading.com. And then I'm on YouTube several times a week. Also you can go in and search it. And we have a new website that we just recently opened, Beyond Gold and Silver, that talks about the rest of the mantras. So the food, the water, the energy, the security, the barterability, community, and shelter.
Excellent. Well, Lynette Zang, it's always a pleasure. And I will look forward to seeing you next month because we're sharing the stage together again. I'm looking forward to it.
We'll do something together, maybe up here. We'll see.